Joining us now to break down the activity is Larry Nussbaum, Chief Operating Officer at Vertex Fund, along with Simon Hallett, CIO of Harding Loevner. Good to have you on the program, gentlemen. Welcome.
Good to be here.
Nice to see you. We're just talking with Bob here about some of this activity weakening just in the last 15 minutes or so. Down 56 on the Dow Industrials. You were just saying what?
JP Morgan, financials leading the way down, and the cyclicals like Caterpillar and Alcoa, which have been very strong, are also a little bit weaker. So we're getting some interesting gyrations here in the last day of trading.
What do you think is going on this final day?
I think people are finally water seeking its level. I think that we haven't seen the bottom, and my fear is all the consumer demand an early Christmas may not really be coming yet. And look at the real estate, look at your mortgage notes, Maria. Very concerning.
Well, this is a long time coming. The market's up 60% from the lows in March. What do you think is behind this optimism? Just that we're not falling off a cliff anymore?
I think that we're not falling off a cliff, but are we ahead of the curve right now? Okay, when is the market going to right itself? And I think all the TARP money, all that money put in to stimulate the economy was great at bolstering the stock market back to near 10,000. But how long ago were we at 5,000 and 6,000?
Simon, is the market really misreading the economy? I mean, could the stock market have gotten it that wrong?
Sure. The stock market often gets it very badly wrong. But I think this is not about the economy. I mean, nobody really knows what the economy is going to do in the short term or even the medium term. We have Nobel Prize winners telling us it's going to be severe deflation, Nobel Prize winners telling us it's going to be inflation. So who really knows? For us, the important thing here is about the companies. And what appears clear and what the market today perhaps is starting to pick up on is that the price of cyclical stocks, not just in the US but globally, has already discounted a pretty sharp recovery in earnings. So it seems to us that this is going to be a time that's going to be pretty difficult for companies, and that cyclicals is probably not the place to be at the moment.
So Larry, here's the problem. The American consumer typically has not participated in this leg of the rally here since the March bottom. They've been putting all their money into bond funds. Just recently we've seen some money coming into the stock market now. Is the American consumer now going to turn around, your typical investor turn around, start putting money in the stock market at a time when you both seem to imply we're near at least a short-term top?
Well, I think the concern is if they put the money in now, is this going to be another falter where we look at the market and turn around and say the consumer demand and the consumer confidence is really falsely up? So I think if you're a consumer and you're waiting on the sidelines and this is your piggy bank, I'd be very concerned to put money in now when it's been bolstered up by big money.
Let me ask you about the way you're investing. We've got two different styles of investing here that you're representing. Simon, you're looking at quality growth names, right?
Yes.
Over a long term.
Yes.
And actually, Larry, you're looking at distress situations.
I hate to say it, and no one likes to pray, but we're contra. We're counter-cyclical.
You're counter-cyclical. Are you finding a lot of distress situations right now?
Especially in the consumer retail sector. Macy's and guys like that, Bed Bath & Beyond, all of them are trying to hold on for dear life with comp store sales down or barely marginally adequate versus month over month. I'm seeing great opportunities to buy businesses, both public and privates, at a discount to assets.
And you think you'll be able to put the investment in there and rehabilitate these companies?
We want to resurrect. If it's a brand name.
Where else is the distress in addition to retail?
Well, real estate, I don't have to tell you. Look at the double-digit unemployment. Look at your mortgage numbers. I think it's consumer. I think it's retail. I think right now, with fourth quarter upon us, I think the real question is, how about China? Always look at China as an indicator. Isn't China under the Industrial Revolution? Isn't that the new global economy? Let's look at China and see if their economy and the renminbi is actually trending up.
But the problem with that, Simon, is China is a cyclical market play, right?
Yes.
And then you don't like cyclicals, right? So would you be putting money into China at this point?
No.
No, he's looking at growth.
China is a cyclical economy in terms of its export base, its manufacturing base. But this year, China has proven that it's all about its savings and using government via its banking system to mobilize savings at an extraordinary rate. First half this year saw China's banks lend an extra $1 trillion on an economy that's about $3.5–4 trillion. It's unbelievable. You know, the counter-cyclicality that the mobilization of savings has been able to maintain. But there will be consequences. There's going to be a lot of bad debt.
Larry's telling us where the distress is. Where's the growth?
I think the growth is going to be from those companies that can use their balance sheets to make sensible acquisitions, to take their brands out to markets where demand is still growing. Well, I think we're going to see a lot of growth through acquisition over the next 3 to 6 months as companies consolidate their industries, improve their bargaining power with suppliers and buyers.
You're still being a little vague here. You want to go to markets with the growth, but you don't like China. You don't like cyclical stocks. Be a little more specific.
China's growing 8%.
Where would we be? Where should we be now?
No, I'm not saying I like the growth in China, but I'm saying I don't think it's sustainable. I think what we're trying to focus on is companies like Nestle, companies in other emerging markets than China, places like Brazil, to some extent even Central Europe, companies that have exposure to growing consumer markets in Africa, for example, companies that can basically get the kind of modest increases in prices that are going to be so rare in a world where distressed investors seem to be very happy about the opportunities that they see coming over the next 3 to 6 months.
So you like non-China emerging markets.
Correct.
With global brands like Nestle.
Exactly. So we're looking at, by sectors, we're looking at companies in the consumer staples sector, we're looking at emerging market banks, and we're even looking at some of the smaller technology-driven companies in the healthcare sector.
You're cringing.
It just scares me when I look at Europe and I look at the deflation and the inflation in Europe right now, and I look at zero population growth in Russia, and I say, Russian oil pipeline, they better add some pipelines, okay? Right. And then I see China as an industrial revolution, the way we were at the turn of the century. They're with the cotton gins. We're an outsourced nation. All of my companies are outsourced. I want to invest in China. I want to invest in markets that are growth-oriented, where I'm seeing the renminbi down and I can buy at a discount to assets and I can get cheap labor. I'm sorry to say it, but since we're outsourced.
Well, I couldn't agree more, but I think, that the notion that Europe was a demographic time bomb, politically paralyzed and so on, just an economic disaster, was absolutely prevalent between, let's say, 1995 and 2005. This was just the time when China doubled its economy. In that same time, when China's economy doubled, its market went nowhere. Germany's stock market doubled. It's about the companies, not about the economy.
This is what makes the market, gentlemen. Great to have you on the program. Thanks so much. Good to see you, Simon. We appreciate it. Thank you so much, Larry. We'll see you soon.
We got about 45 minutes to go before the closing bell. We've been all over the place today.
Yes,
down 120.